I still remember the day I first looked at a one-bedroom off-plan in Dubai in Business Bay priced at 500K and thought that was seriously overpriced. That was in 2020. Now, many will laugh at that, including myself. So after almost 6 years, analyzing over 1,200 projects across Dubai, from downtown to Dubai South, from Palm Jumeirah to JVC, I've come to one very clear conclusion. Dubai's real estate market is still the best in the world, not just because of its returns, lifestyle, or tax advantages, but because of how fast it evolves, corrects itself, and adjusts accordingly. And while I often criticize off-plans or highlight certain risks, it's only because I compare apples to apples within Dubai, not Dubai versus the world. Because if we compare that, Dubai wins hands down. So today, let me share exactly what I've realized after analyzing over 1,200 projects across Dubai, what's truly world-class about this market, and where we still have room to improve. Hit that like button, subscribe, and let's get into it. I'll first start with a reality check. According to Dubai Land Department, Dubai recorded over 125,000 real estate transactions just in first half of 2025, up from 99,947 in the previous year, a 26 increase in volume, and the total value hit 431 billion dirhams, which is up 25% year on year. All this data is based on Government of Dubai Media Office. Residential sales made up around 92,000 of those, worth around 262 billion dirhams, a 23% jump in volume and 36% in value compared to H1 2024 based on a report by Space. In Q3, price growth continued, with residential pricing rising 12 to 20% year on year, led mainly by villas based on a CBRE report. At the same time, rental growth softened to about 4 to 5% growth, reflecting maturing supply. Off-plan, though, dominated the Q3, making up to 75% of all sales, driven obviously by good payment plans and strong investor appetite. And again, all this data is mainly taken from DXB Interact. Bottom line, demand is strong, prices are up, and Dubai's 6 to 8% tax-free yields still beat global benchmarks such as London, Singapore, and many more, where yields are typically way under 4%. So while I do point out market flaws at times, the truth is no city offers Dubai's mix of high returns, transparency, and lifestyle. That's why global capital keeps pouring in from Europe, Asia, and the CIS, and now more than ever from the US. Now, in some of my earlier videos, I've shared my personal opinions about different developers and projects in Dubai. I always aim to speak transparently from an investor's point of view, but I do realize that at times my comments might sound direct. Before I continue, I just want to make sure that everything I share on this channel is based purely on my opinions and experience as an investor in the Dubai market. My goal is always to analyze the market and provide insights that help viewers make informed decisions. Never to harm, criticize, or misinterpret any data, any developer, any company, and so on. As an investor in Dubai, I genuinely respect everyone who's contributing to this amazing market, to Dubai's real estate growth, and believe there's something to learn from each project. After reviewing hundreds of towers and communities, one thing became obvious. Every developer in Dubai brings something unique to the table. Emaar Properties, the master of the communities, the scale, amenities, and brand consistency is unmatched. Omniat, arguably one of the best at the luxury towers, with architecture that I personally consider pure art. Miras, perfectionists of low-rise buildings, lifestyle-driven projects with incredible finishing. Majid Al Futtaim, or MUF, pioneers of green, sustainable communities like Tilal Al Gaf and Gaf Woods, really pushing Dubai into a new era. While Shoba Group is delivering strong quality and craftsmanship, expanding impressively into different Dubai territories and villas with better finishings every year. The MAC properties, the all-rounder, from super luxury villas to very accessible apartments. They cover every price band, every audience, and honestly, every location even. There's a lot of supply, but if you find the right one, it could be the best investment. Bugatti graded prime locations and unique layouts, maximizing value where other developers might overlook. I can name many more, but each of these players defines a different piece of the investment puzzle. Some investors seek ultra-luxury, others want strong value entry. Some are focused on future-proof sustainability, some on rental yields and payment flexibility. Everyone's different. While some might question why I always highlight the MAC as one of the best for high rental yield investments, especially in Business Bay, I can say this with full confidence. Most of my personal investments with the MAC have outperformed my expectations. Their pricing tends to be highly competitive when they launch even, and thanks to their strategic and central locations, their units attract strong tenant demand. Whether we're talking about Business Bay, JLT, or Dubai Marina, the MAC projects remain very interesting for good value, fair rental rates, a wide variety of units that offer excellent proximity to the most important hubs in the city at a very good price for the tenant. For instance, it's also fair to recognize that Danube does a few things particularly well. Their 1% payment plans are among the most flexible and buyer-friendly in the market, and some of their Business Bay projects have performed quite decently in terms of resale activity and rental demand. I've mentioned this before, but I'll say it again that their furnishing department, the Danube Home, offers also good value for money products. I've actually used some of their furniture myself when fitting out a few of my own apartments. So like with any developer, it's about understanding where their model fits best for certain types of investors. Of course, it's not all perfect. The market still has issues, but it's improving. I recently discussed the 5 red flags to watch out for 2026, things like over-marketing, inflated off-plan pricing, speculative payment plans, and supply pipeline risks. But here's the key difference. Dubai is actively fixing that. So again, while you might think that I am sometimes more critical, I actually still put Dubai on the top of the world if we compare apples to apples, and we don't compare Dubai with something else. If we just look within Dubai, there are different things happening. But if we take this and just compare it to the major capitals of the world, Dubai wins again, hands down. For example, DLD has recently introduced the first-time home buyer scheme aimed at helping residents become homeowners in a fairer and easier way. This is part of that broader trend where new policy is actually positive, not restrictive like in many other countries. So yes, issues still exist, but unlike many markets globally where regulation is reactive or weak, here it is increasingly proactive. I said it many times and I'll say it again. Ready properties currently make much more sense for investors than off-plans. Why? Because the risk premium for off-plans nowadays is very high, but the discount is smaller or even not existent. Let me unpack that. According to Zavia, data shows that in the Q1 of 2025, the off-plan sales accounted for 56% of all transactions. So around 25,000 transactions for the off-plan and around 20,000 for the ready secondary market. So although off-plan is still very dominant, it's becoming more crowded. Prices are higher at launch and there's less built-in upside unless you pick carefully. And by the way, I'm speaking about the same developers having their off-plans and having their ready properties. I'm not comparing different developers even within the same branch, even within the same community. Meanwhile, ready units offer immediate rental income, known finishes, known location, and less execution risk. So my message to the developers would be that if the off-plans would remain at the same price, or if they want it to be meaningful for investors, not only outside, but also residents from Dubai, they need to offer genuine value, either by a meaningful discount versus the ready units, so that the ones who actually take their risk and invest in those off-plans and wait for 3 to 4 years see some capital appreciation. And investors, we lock money into a project, we give full credibility to the builder, the developers, contractors, so We would like to be rewarded for that risk that we take. Especially for locals and residents who can take mortgages, it's much more meaningful if the price would be lower, which is similar to many other markets worldwide where the off-plans are actually lower because you're giving an incentive to the investor to lock their money and then they're being rewarded. So it's not about saying don't do off-plan. I actually love and would love to have more off-plans in my portfolio. My point is making the off-plans make sense for everyone, not only for non-residents who buy them just because it's just easier. They can't really get mortgages so quickly, so that really makes sense for them. Here are some deeper lessons from my project-by-project dive. Micro-location matters more than the brand alone. A mega developer with amazing high finishes in a very remote location might actually underperform versus a smaller developer in the best location, which is very desired by the tenants and can really generate you income straight away. Unit size, view, floor, access all matter. Nowadays, there is supply and you can compare, so you would expect the buyers or the investors to understand that much better than it used to be 10 or 20 years ago. Payment plan structure is critical. Some payment plans look very attractive, even the ones that I've previously mentioned. MR, some of them there are amazing, but the payment plan is a bit harsh and it would be very good to see there's some flexibility for the investors. Exit strategy needs to be built in from the start. Whether you plan to hold for 5 to 7 years, rent out straight away, or resale during construction, you must ask yourself what happens at year 2, year 3, can you keep up with the payment plan? You really need to plan this out properly. How many other similar units are in the market? What will be the exact yield or just an approximate plus minus 1% when this project will be finished? And supply pipeline is not a myth. We all know that Dubai will receive tens of thousands of units in the next 1 or 2 years. You must understand the delivery schedule in your specific community or area of interest to understand the oversupply risk. Demographic shift matters. We're seeing more families buying, more people relocating to Dubai, not just investors. For example, in Q1 2025, the townhouse transactions rose by 75% year on year. That means that the future demand is shifting from purely yield-driven to lifestyle-driven. Lifestyle plus community will become the absolute differentiator. Use global buyers' currency advantage. With strong currencies like the British pound or euro and the dirham being pegged to the USD, foreign buyers currently have an edge, something I mentioned in earlier videos and remain valid until now. Finally, regulation and transparency are improving. The data platforms, the escrow monitoring, first-time buyer schemes, all that feeds into higher investor confidence, which is good for us. Now, if you're planning to buy in Dubai, whether ready or off-plan, and you want someone who can secure the best projects, negotiate better deals, and guide you step by step, I've partnered with Silver Springs Properties, one of the most reliable boutique agencies in Dubai. Their team works directly with most major developers, from Emaar to Shoba and Maf, and they can help you shortlist properties that can actually outperform themselves. If you'd like a direct connection, the link is below this video, or you can reach out to me and I'll personally connect you. So after analyzing 1,200 plus projects in Dubai, I can confidently say one thing. There's no place like Dubai when it comes to real estate innovation and opportunity. Yes, we have issues to solve. And yes, I'll keep pointing them out. But that's exactly how we make this market better altogether. Because only through honest conversations and smart investing do we create a sustainable system for buyers, sellers, and everyone involved. If you found this helpful, hit that like button, subscribe, and check the description links. Reach out for advisory or one-on-one help with me, and I'll see you in the next one.